NVIDIA, which holds its annual shareholder meeting today, is up about 40% over the past 2 months and is a little more than 3% from its January highs. And it's not just NVIDIA. AMD is also up more than 40% over the past 2 months. Marvell has gained almost 30%. And Micron reports its earnings after the close today. Shares are up more than 30% since its last report, although it's still more than 10% off of its 52-week high. Let's talk a lot more about this with Jordan Klein, tech, media, and telecom analyst at Mizuho. When we're talking about NVIDIA going forward, what are your expectations? Can it still maintain these very lofty expectations? Does it still have the same dominance when it comes to the AI chip space?
My view is 100% yes. I personally love NVIDIA right here. The fact that if you go back to middle or early of summer last year, the stock is kind of traded sideways. It's still slightly below its high, and the multiple that it's getting in the market is very low relative to its growth. I think the key for NVIDIA is they're still dominating the training market with GPUs. They have the best product. It offers customers the best performance, and the demand is insatiable. So they're making and selling everything they can. And the key here is what I think is going to be almost an acceleration of their sequential quarter-to-quarter beats and raises that will come as more of this Blackwell product, their most advanced new GPU system, starts to ship in volume this quarter and then going into the back half of the year. So that's going to be the true test, and I think they pass with flying colors.
We're looking at an NVIDIA-led market, which deserves to be much larger as a percentage of the stock market. Rice just talks about how it could be dramatically larger, kind of like 1980 with oil. And that's what's percolating. Away from that, we should be talking about FedEx, right? Because FedEx has got the best read on the economy. But there are just a lot of people who are really what I describe as all bulled up, whether they're in the large cap techs or the quantum scapes and the Oklos, the things that you and I don't talk about that sometimes make me feel like, are we crazy?
I know. Well, I mean, there's a more speculative part of the market. Certainly quantum is. Now, we've had the Oklo CEO on. They're talking about their ambitious targets for building nuclear power plants. And obviously, the stock has had quite a move. Back to this, it is funny to get back to what we spent so much time, the three of us typically talking about, as we should, which is the AI ecosystem.
Right.
Who's benefiting, who's not, who wins, who loses. And to your point, I know there was a very long piece as well out today. I think it was Bank of America that had a very long piece in terms of their sort of overall view of so many of the different things going on. Is that, does that stand or?
Yes, I think it does. Jensen Huang they've got their shareholder meeting today. I don't expect any fireworks, but it's going to reaffirm that what's happening is that industrial revolution is on.
And by the way, I just stopped you, but there's one of the headlines.
Yeah, that's big.
Right. I mean, look, these numbers are
big.
$5.5 trillion roughly in global IT spend. They see the AI part of it growing to $820 billion by calendar year 30, and that is a huge compounded annual growth rate.
Right. Now, there are people who are saying, look, NVIDIA could be a $6 trillion company. Now, just a few months ago, we thought NVIDIA was going to be destroyed by DeepSeek.
It didn't last too long, the old DeepSeek moment,
it was
but yes,
boom, and then you had
a couple of weeks
and then you had NVIDIA being shot down about China. Now you hear, wait a second, they've got these incredible accelerated computing chips. They've always had that, and they have, frankly, when you see this build out of the data center, the Indiana one, the Louisiana one, when you go into those things, all you're going to find really is NVIDIA chips. There's some. Look, we're going to have some
others. It's interesting how things are starting to. There was I think it was a herd on the street today in the Journal about NVIDIA's cloud computing effort as well.
Okay, that was a sabotage. I read that piece. I've got it right in front of me, and I just said, okay, this is just something that it's never meant to be a challenge.
Okay, and
to see that piece is to say, did someone want to stop this NVIDIA move? Because if you actually look at how little that business is and how it's just kind of something they train on, it's ridiculous. But it's going to stop people. There's a last ditch short attempt.
Yeah,
that is not like it's a lot like Zinderlith.
Interesting you see that.
That's the Fortin.
Yes. At the same time, there is something that's somewhat reminiscent for me of the 90s and the telecom boom and the vendor financing part of this, where you've got the companies such as NVIDIA, for example, the relationship with CoreWeave, and many others, and AMD may have these as well, where they're helping to finance the very building of the facilities that end up buying the chips from them.
I'm not disagreeing with that, but let me tell you something. I was doing some work last night with a guy named Joe Fahmy. How about this? Maybe this bull market is 1995 to 2000, and maybe we're in 97, 98.
Really? It's an interesting place to go in there.
Let me give you the next slide. The guy, let me give you, Boomer's going to be the mayor. I mean, no. I mean, this is, I'm just saying that what, let me go back to what I said at the beginning. There are people who are trying to justify this move in any way they can.
Yep.
Then there are people who are trying to stop this move any way they can. And it's all about NVIDIA breaking out to new highs. There used to be actual commercials that would run about people talking about how billionaires who'd left the stock. And you looked at them, you say, wow, they left it. Now you look like clown, bozo, crusty. I mean, where's that? I need that.
I want to come back to this work you did. You mentioned some gentleman's name I don't know.
FHMY. It was something.
And then you said this could be a moment akin to 97, which, of course, I mean, we had... Oh, I remember those years well. Sitting across from Joe Kernan. They were the KTEL years.
Right.
I mean, they were the insanity.
Remember, I got invested for Wave 4?
And speculation. Yeah, I remember it all.
I was not short the stock.
I think you started TheStreet.com around then.
95. Some people say 96. But there was a company called Wave 4, and I said it was a fraud. I wasn't shorted. And by the time the SEC was finished investigating me, the company had gone out of business.
I remember that. You were a guest on Squawk.
Yeah.
Yes.
I said,
you got yourself in all sorts of trouble.
Yes. Case closed. I said it was a 20. It went to 0.
Right. I mean, again, to that period when you bring it up, on obviously having lived through it and reported on it, there were so many questionable companies. And by the way, the public, I mean, we had companies coming public every day that had no business.
No business at all.
That is not this period
That's 99. 99 was the year, and then the first 3 months of 2000.
All right, but what you are saying is that the AI boom in some ways could mirror, if not exceed, that of the internet, and in terms of what that means for the market.
I'm just cribbing Jensen Huang. I mean, every time I say something like that, I just remember what he told me on multiple occasions. So far, he's been right about pretty much everything. And he's about to have, Blackwell shipping in volume, which means that you can start getting the yield up and the gross margins go higher. That's their new chip. And this is it. This is the fulcrum of this market. If this stock can break out to a new high, there's going to be panic buying.
It's so refreshing to have a show again where we talk about NVIDIA.
Yeah. Now, hold on, David, is there going to be a countdown on NVIDIA? 151 and 153 is the high?
I guess we are going to do that. Back in the old days, we would have had a countdown clock, probably.
Right. Well, we should put one in.
We're not quite there yet.
Remember when all those billionaires were selling? Where'd they put their money in? Are they short?
Which billionaires are you talking about?
I used to see this list of billionaires who sold NVIDIA. Well, they were wrong.
They were wrong. It would appear that they were wrong. I do still, listen, there are still plenty of questions ultimately about competition that comes from some of the hyperscalers who are developing their own chips, what that will mean, not for next year or the year after. And there are also, but after that, and there are also questions ultimately about whether you can continue or will need as much compute as we do now, or more, or less, that things will start to level off a bit.
Well,
how you see it?
When I see the spending, Oracle, Amazon, Meta, I think we're early. I mean, these news sites are so much bigger.
Again, and not to mention the CoreWeaves, the Lambdas, the Nebuuses. You go on these neo-clouds that I'm learning a bit about.
Nebius is a Robinhood stock versus.
Is it? Yeah. Although it's kind of real. I mean, they're doing the same thing.
But I'm just saying that CoreWeave is a huge company. But David, CoreWeave is the kind of company that ought to be issuing stock in that balance sheet event.
Well, we were just talking about the end of lockups, and that would probably seem to be the first order there, as opposed to issuing additional stock, just letting.
I got to hand it to them, and they pulled it off. Michael Intrader, but he's a Jersey guy. He's not in the Valley. The Valley. Remember when the Valley was what we talked about?
Yes.
That's all we're going to talk about again.
Even with the market weakening somewhat, this is a big deal. NVIDIA just hit a new all-time intraday high just a couple of moments ago. You're watching it right here. We're up almost 4% now today. 14% year to date. Now, the prior high was on Jan 6th, I believe. We're already above the closing high, and we just hit a higher intraday price than we've ever seen for the stock, which, granted, has largely been moving sideways since last summer. But Wall Street is turning more bullish, with one firm seeing another 65% upside from here. Christina Partsinevelos has the details. Christina.
No, Kelly, you just mentioned it, just shy of its all-time high. It would actually be 153.13 if it closes at that, or below, above that, then you're seeing an all-time high close. And it's also the best performer among the Mag 7 today, and has just edged above Microsoft in terms of market cap. And this really comes after NVIDIA's annual stockholder meeting, which wrapped up just less than an hour ago. CEO Jensen Huang was speaking, and he made some pretty bold statements. He said that, quote, they stopped thinking of themselves as a chip company long ago, and that they're an AI infrastructure and compute platform. He also said the next big wave is physical AI, basically robots that can interact with the real world. Jensen Huang calling this the next multi-trillion-dollar industry. So he didn't say anything brand new on the call to shareholders, but definitely very bullish. Wall Street analysts also clearly buying into the hype. Loop Capital just increased their price target from $175 a share to $250, arguing the AI spending wave is so massive that even these sky-high numbers that all of these hyperscalers are spending on GPUs, et cetera, just look reasonable. Their key point in the report is that hyperscalers are planning to shift away from about 15% GPU compute today, that's a part of their whole stack, to around 50 to 60% by 2028, which could alone create $900 billion in demand. Then you have Bank of America also out with a note saying AI could drive $1 trillion in spending by 2030, so very similar to Loop, with data center systems taking a much larger share of IT budgets. They also highlighted how NVIDIA's NVLink technology, which really helps multiple GPUs just talk to each other, communicate, transfer data, and it's what they're saying is the secret weapon in the AI chip wars, giving NVIDIA a massive edge over competitors like AMD. And so we are seeing shares of NVIDIA just continue to climb higher, Kelly.
Wild. 153 and change, the new high watermark. Christina, thanks. Let's bring in the analyst behind that Bank of America note, Vivek Arya. He's BofA's senior semi-analyst. And Vivek, you've long maintained that this security is still undervalued, as incredible as it's run, especially prior to last year was. What powers it higher from here?
Thanks, Kelly. I think that, when we look at AI, our work suggests that the spending on AI is only about 5% of all IT spend today. IT spending is about a $5 trillion industry. And if I look at how much is being deployed in AI infrastructure this year, it's about $250 billion. So only 5% of that. And we believe that over time, it could be more than twice of that. So we think the spending on AI is going to be over $1 trillion by the end of this decade. And this is not just by cloud companies. We think the benefits are going to spread to consumers, to enterprises, and more importantly, as we have seen in the last few weeks, across sovereign infrastructure, right? Every country, every region wants to be self-sufficient in deploying their own AI infrastructure in their own language, their own culture, with their own data sets. So that's why we think this is a multi-year opportunity. This is not a 1 or 2 year cycle.
Yeah.
Now, what does it take to be successful in this industry? As I think you saw in the previous segment also, that it is not just a semiconductor industry, that this is an industry that requires expertise across silicon, across hardware, across software, across developers. It requires scale, it requires incumbency in a lot of these deployments. And we think NVIDIA is the best position to take advantage of this growth. And then finally, the technology itself is leverageable to many other new markets, such as robotics and physical AI.
Right, exactly. They could then even grow that even more. So one thing I just wanted to highlight in your note is that on the one hand, this is about how big still the total spend on AI could be. And obviously all the stocks in this ecosystem have benefited this year. On the other hand, you think people are expecting NVIDIA to lose more share than it actually will. So if it does maintain something more like 60, 70, 80% market share, which is great for NVIDIA shares, who is it that might be to the detriment of in the longer run, right? Like at some point, are some of these competitors' rallies going to run out because NVIDIA, as you're describing it, is putting together such a more competitive ecosystem?
Sure. I think the first point is that this is a rising tide. It's going to benefit many companies. NVIDIA and Broadcom have been our two favorites, but we think benefits will span across to AMD, to Marvell, to memory companies, to semi-cap companies, to foundries. So this is a rising tide. The reason NVIDIA, I think, grabs kind of the lion's share of a lot of this is because they have the widest breadth of products, right, that addresses a lot of these different trends. So that's one aspect of it. The second aspect, if you say, well, how can one company maintain such a strong market share? Because that is what history tells us about semiconductors, that the incumbent, always manages to maintain or expand their market share as long as they are executing extremely well,
right,
as long as they are able to maintain scale. And I mean, keep in mind, and Intel is still selling 7 out of 10 CPUs, despite the issues that they have had over the last 4 or 5 years, because semiconductors is an industry with very high entry barriers. And so far, there is no sign, NVIDIA's execution continues to be very strong. So we have not seen any evidence that they will lose share.
If we kind of take that narrative and run with it, and to his credit, Jensen Huang is doing everything he can to maintain that leadership. Is this an argument against jumping into AMD for a catch-up trade? Is it an argument of a little bit of caution maybe with Intel, even given everything you're describing? In other words, if the strong are going to get stronger, then who are the ones that are not able to catch up necessarily?
Sure. So we think if NVIDIA maintains 80% of a market, that still leaves 20% of a market that can more than double or triple over time. Right? So we think that provides plenty of opportunity to others. Every name is different. AMD is a combination of data center. It's a combination of what they're doing in gaming, combination of what they're doing across with the Intel in terms of gaining more share in those markets and embedded markets. Marvell has a slightly different profile. So every company has a slightly different profile. But I do think it's a rising tide. And, the evidence for that is if you look at a number of these prominent cloud companies over the last 5 to 10 years, every one of them found a way to participate in the growth of adoption of cloud services, whether it was in e-commerce, right, whether it was in streaming, whether it was in social. They all found their own niches in that market. So it didn't really come at the detriment.
Yeah.
I think it really came at the expansion of that pie. And that's, I think, the big call, that this pie is going to expand to such an extent that it will actually rise many boats, help many boats to rise.
Appreciate you putting the numbers to it. Quick final question is, what about China, right? They have a huge dog in this fight. It's national security. It's all the rest of it. And we are trying to be smart about how much we let NVIDIA products into China. If we constrain their market share there, maybe China grows its own organically. How do you see that evolving?
Sure. I think China is an important market for these companies. But it's interesting that when we look at our model, China data center is effectively zero for NVIDIA and many of its peers. Right? Over the last 8 to 10 years, China's spending in cloud has actually been less than 10% of the total global cloud spending. So, China to a good extent was restricted. I mean, it's not a good thing that these companies can't sell to China, but I do think that there are many opportunities outside of China that they can participate in. For example, look at all the new projects that are coming up in the Middle East. Middle East was never a spender when it came to infrastructure during the internet age. And now they are going to be a massive spender when it comes to spending. And I think that spending is going to be far greater than what China would ever be spending on AI infrastructure.
That's fascinating.
So, it's good to see you. Welcome back.
See you as well.
What a day to have you. No China, no problem? I mean, is that what the market is saying here?
Look, I think you have to take a little bit of a broader picture of what's been going on with the AI trade, right? And it singularly has to do with the perception around AI CapEx. Right, just a couple of months ago, when all of these stocks were on their lows, there was this perception that AI CapEx was in the later innings. And now I think we've squarely gone to the point where now the market believes that AI CapEx is in the middle innings. And let's talk a little bit about why that's happened and why that shift in perception has happened. One is competition around frontier models is not slowing down. So we saw Meta, right? They took a little bit of a step back with Llama 4, but how are they reacting to it? They're reacting to it by investing a lot in AI scientists. They took a stake in Scale AI, and they're not going to slow down until they win this race. And so that's one. Secondly, the shift that's happened very, very quickly over the last 3 to 6 months is that compute is not only being used for training infrastructure, but it's increasingly being used for inference. OpenAI's revenues have gone from $3 billion to $10 billion very, very quickly, right? And then the last piece of it is just the Trump administration policies is opening up access to NVIDIA GPUs to a wider, broader set of countries like Saudi Arabia with the deal. And so you're seeing everything that was, oh no, AI CapEx is coming to an end. All signs over the last 3 months have pointed to AI CapEx accelerating, not actually decelerating. I think that's what's happening with the trade right now.
You think we've answered all of the questions about DeepSeek and the initial fears? You mentioned compute. We were thinking that day, well, maybe you need less compute and it's going to be cheaper. And it turns out, as people were saying then, and you're saying now, and which seems to be correct, like, no, more compute.
Yeah, I think
that plays right into NVIDIA's hand.
Absolutely. And I think the last time I was on your show was during the DeepSeek, so it's a lot nicer to be here during the rally moments.
Have we put that to bed?
So we have. I do think we have. And I do think the market is interpreting that as an iteration and an evolution, not a revolution. And remember what's been happening, though, with the frontier models. There was this perception back then that frontier models were commoditizing because companies like DeepSeek take a lot of the things that Llama and OpenAI have built because of the open source nature of Llama in particular, that they could extract that inference layer and create an inference model associated with it. But what's happening now is the frontier model developers are actually starting to realize, you know what, we can't give away all the goods. We have to start closing parts of our ecosystem. So the foundational model players are actually saying, look, we need to close certain elements of and protect our IP because we're investing $50 billion plus a year on this, and we want to be more vertically integrated going forward. And so I think that's going to lead to more differentiation versus commoditization, and that's an important nuance for companies like Meta that are investing a lot right now.
You're suggesting when you say middle innings that the game's going to go on for a long time, and NVIDIA is going to continue to win it.
I certainly think so. Now, there's going to be other silicon companies that win as well, right? So we have ASIC companies like Broadcom, Marvell, memory players like Micron. So there's a whole host of semiconductor companies. It's not just going to be an NVIDIA, dominated game, but every dollar of CapEx right now, 60 cents is being spent on an NVIDIA GPU. Wow. And so, we know who's winning right now.
So you look at your other holdings. That's one of your top holdings. NVIDIA, obviously, is.
I hope you're all doing great today. And what a day it's been with NVIDIA, reaching a new all-time high, finishing the day up 4.3%. Today, Jensen Huang reaffirmed the bullish outlook for NVIDIA's future at NVIDIA's annual meeting of stockholders. And then we got even more good news in after hours when Micron reported fantastic earnings, saying that data center revenue has more than doubled year over year. Keep in mind that Micron supplies NVIDIA with its HBM memory product, and this bodes extremely well for NVIDIA and the production ramps of both Blackwell and Blackwell Ultra. Remember that Jensen told us at GTC Paris that Blackwell Ultra is, quote, completely in production. Blackwell Ultra is set to launch around the end of this quarter, and production should ramp very quickly. Blackwell Ultra is simply an upgrade of the chips within the Blackwell system. It's not a complete system upgrade like Blackwell was. This means we are substantially less likely to see delays in the rollout of Blackwell Ultra like what we saw with Blackwell. As NVIDIA stock was approaching a new all-time high, there was a lot of chatter about potential competitors to NVIDIA. Some analysts have recently said they think AMD can compete with NVIDIA on AI GPUs in 2026. But I want to remind you that NVIDIA has a massive advantage as they have taken a total system approach rather than focusing on a single component of the system. This is such an important point, and it's what Jensen has been talking about in recent months, saying that NVIDIA is no longer just a chip company. They're now an AI infrastructure company providing entire systems, including both hardware and software. NVIDIA's CUDA is a massive strength for NVIDIA's competitive moat, as it is widely recognized and the go-to choice for the vast majority of developers. And so even if another company develops a faster chip than NVIDIA's, it really doesn't matter because NVIDIA is driving efficiencies at every component of the system. You can only improve a GPU so much before you run into bottlenecks in other parts of the system. NVIDIA's big advantage over other companies is that NVIDIA is rapidly innovating at each component of the system rather than just focusing on a single component. And so I'm not concerned about NVIDIA's competitive moat being breached anytime soon. Additionally, NVLink Fusion is very important because it severely weakens the bearish argument that NVIDIA's moat will be breached by a competitor. Now, even if a company develops a better accelerator than NVIDIA's, customers can simply use those accelerators within NVIDIA systems with NVLink Fusion. This increases the likelihood that customers will remain in NVIDIA's ecosystem, which is why I think it actually strengthens NVIDIA's moat. On top of all of this, NVIDIA is delivering performance upgrades that are so substantial that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. NVIDIA's customers are not investing in infrastructure just to stay relevant. Rather, they're seeing a direct impact to their balance sheets when they upgrade to NVIDIA's latest products. This is not a short-term fad. This is a multi-year trend. Jensen Huang believes that the world's computing capex will reach $1 trillion annually by the year 2030. If he is correct, which which it usually is, then that would mean NVIDIA is going to be worth substantially more in the future than it is today. One of the reasons I like talking about NVIDIA so much is that NVIDIA provides us with such great line of sight as we look forward to the future. Again, this is not a short-term fad. I was bullish on NVIDIA below $100 per share, and I continue to be bullish on NVIDIA today. I'm not bullish simply because the share price is going up. Rather, I'm bullish on the long-term future of NVIDIA because of the fundamentals of the company, both financial and technological. Sure, there will be periods of fear along the way, but as long as the underlying thesis remains intact, I continue to be bullish on the future of NVIDIA, and I genuinely think this company will be worth substantially more in the years ahead than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.